Hey guys, we're back with Michael Kidd. He's a loan officer here in San Antonio, Texas at Directions Home Loan. I'm Kristina Espinoza with eXp Realty with the Zachary team, but y'all should know that already. And we are here to talk about the loan lowdown today since we are down here in the South. And we're going to be talking about conventional, FHA, VA, and USDA, and kind of just go into a little bit about each one. And he's going to clarify kind of what each one means and just kind of give us the lowdown on the loans.
Absolutely. Well, thank you guys again. Michael Kidd with Directions Home Loan. So yeah, a lot of times what we find is people call in or talk to you guys as well as real estate agents and say, you know, what's the difference between this and that? I know a friend of mine did FHA. Somebody talked about conventional. What's best for me? So
Yes.
a little bit about each loan type, but what I will tell you is that's one of the main jobs that I have as a loan officer is when I assess someone's credit, income, asset. There's a number of different factors that go into which one of these programs that we choose. So coming in the door, for example, if you're a veteran, probably most likely we're going to use VA for sure. But outside of that, depending on if you're buying it as a primary resident, investment property, stuff like that, that's my job to kind of compare and contrast the two. If there is, I think, a comparison between them, an option to maybe go with a couple different routes, I'm always going to break that down and share that with the client as well so that they can see it kind of, you know, apples to apples on paper, if that makes sense. So a little bit about the different loan types. I would say as most first-time home buyers, a lot of times we lean a little bit more towards FHA. Again, it depends on your unique scenario, but FHA is a little bit more lenient when it comes to credit score. In fact, right now we can go down to 580 credit score with FHA with as little as 3.5% down payment. FHA also leans itself to be able to use some of the down payment assistance programs a little bit more readily as well. So that's another reason why we kind of go that direction. FHA does allow a little bit higher debt ratio. As far as collection items and things like that, there's a factor that comes into play, but we don't have to make people pay off collections or charge-offs and stuff like that. So definitely don't feel like you've got to have everything perfect before we start working with any type of loan, but especially FHA does allow for some variance on those. As far as, you know, who can use an FHA loan? FHA has to be purchased as a primary residence. So you cannot buy an investment property or a vacation home with that. It does not have to be your first home. So you can own a home with FHA, sell that home and buy another home with FHA. You can also use it if you are relocating. So if somebody's coming from another state and they have an open FHA loan, they are allowed to have a subsequent FHA loan as long as they move outside of a certain distance, basically. So just some things about that. One of the other big loan types you'll hear is conventional lending. So conventional lending is probably the broadest spectrum of all the loans. So you can use it as your primary residence, a second or vacation home, investment properties as well. The most encompassing of all the loan types. Conventional financing, correct. So from a first-time homebuyer perspective with conventional, there are some specific programs that are as little as 3% down for those as well. If you're looking at like investment properties, you're typically looking at a 20% down payment using those type of programs. As far as like second homes, it's usually a 10%. So like a vacation home somewhere or a lake house or something like that. Conventional lending is a little bit more strict, a minimum of a 620 credit score. We can go up right up to a 50% debt ratio depending on how strong of a borrower that you are. But again, I would say overall it's maybe for somebody with a little stronger credit profile, a little bit lower debt ratio a lot of times leads more to conventional lending. VA is one, I think we're going to do a little video after this, a little bit more detail about VA, but obviously as a VA loan, you've got to be active duty or a veteran of the military. There are certain minimum criteria that they have to meet as far as time of service, and that's something that we can go into when I speak to them as well. I say VA overall is probably the best deal in the business. VA is 100% financing. As far as qualifying, I would say it's the most lenient when it comes to debt ratio, when it comes to exceptions. Our goal is to get everyone into a home as much as possible. When it comes to VA from an underwriting perspective, we know that VA wants our veterans to get into homes, right?
Exactly.
To help them and their families after they've given us their service to our country. So just to let you know, that is, even though there might be some exceptions in other deals that we can't get done with VA, a lot of times we can. That's probably the best way to put it. But zero money down with VA. As far as, like I said, credit profile, it's the highest debt ratio possible. Sometimes we can even go above 60% debt ratio with VA. And again, we'll go into a little bit more of that, but I don't think I've ever had a veteran buy a home that wasn't using VA as long as it is their primary residence. Again, it has to be your primary residence to buy for VA. USDA is very specific to the area. So there's certain areas that are in USDA territory. So that's the starting point with that. Most of the time you'll find on a listing, they'll have it as an option for USDA. Usually it's a little bit more outside of the city limits, probably the best way to describe those. USDA is also 100% down, 100% financing program, so zero money down. There are some income limits and things like that to come into play with USDA. So again, when we assess someone's credit, where they're buying, what's their situation, what's their background, are they a veteran or not? Again, that's the questions we ask during our pre-qualification to make sure that we're aligning you with the best program.
Absolutely. So I really like how you clarified some of the conditions that go with each one, because I think a lot of people are like, oh, conventional is the best type of loan, and always go with conventional, always go with FHA. And I really like how you broke everything down, because there's so much confusion out there, and there's so much hesitation towards certain loans. And I think if people just educated themselves and
Sure.
just came to people like you with questions, it would definitely clear a lot of things out.
Yeah, and when you talk to everybody, friends, family, they're going to say, oh, I did this loan or that loan. You know, they might not know why they did that loan.
Yeah.
My
Why
job
they
is
qualified for it.
exactly, and my job is to present all of that to each client, so that again, if there are multiple options available, I want them to see them in writing to make the best decision for them.
Absolutely. So if anybody wants to get a hold of you, how can we get a hold of you so we can ask you all these loan questions if we're confused, whether you're agent or whether you're just a customer?
Absolutely. So again, the best way to reach me is probably start with you guys. We'll share our information again, but reach out to me directly, please. We do have other ways to reach us, but I think having that initial conversation, whether it's in person or over the phone, is always the best way to start.
Okay, sounds good. Once again, I'm Kristina. This is Michael Kidd. We're gonna come back to you with specifically a VA video. And as always, like, subscribe, follow our social media, go to our website, and comment and everything else. And we will see you on the next one.